mutual whole life insurance is the best vehicle for you for becoming your own banker. It's paid out a dividend, as far as I know, for the last century, if not 2 centuries. Mutuals offer ironclad guarantees. Few people realize that the insurance industry, dominated by mutuals, was the only sector that made it through the Great Depression without a disaster and with policyholders financially intact. The cash value and the death benefit are guaranteed and tightly regulated by the states and provinces if you're in Canada. That means your cash value is there regardless of market conditions, and when you die, your heirs will receive the full face value of the policy. You can borrow your premium payments because your premium payments belong to you as a policy owner of the company. You can borrow them back at any time you want for any reason you need, regardless of your credit worthiness. One of the lesser known aspects of mutual insurance is that major corporations and banks buy policies on their lives of their employees and use the cash value to fund employee benefits and as a safe harbor for working capital. By some estimates, Fortune 500 companies and large banks have policies covering some 5 million employees. Instead of doing what banks say, put your money in our new CDs at low rates so we can turn around and lend your money out at a profit to us, do what the banks do. The other reason why becoming your own banker is so safe is that you can guarantee yourself a rate of return when you use these policies. When you borrow that capital out and you pay for your own expenses that you normally would have to have financed from somebody else, and you finance it yourself and you pay yourself the interest that you would have paid to somebody else, you are now guaranteeing yourself a rate of return. That is the difference. So why do you need to go invest your money somewhere else when you can actually make yourself a rate of return by borrowing your own money and reducing your debt? These types of insurance policies are so ironclad. They have guarantees behind them, government guarantees. It's actually part of the Tier 1 capital that banks use to find out how strong they are. Another reason why becoming your own banker is so safe is that the interest that you pay to the insurance company when you borrow out your own money comes back to you in the form of dividend interest. Why do you think mutual insurance companies charge you an interest rate when you borrow out your own money? It's because they have to make sure, as a policy owner, that you are given a dividend. So in reality, the money that they're charging you, you are actually getting back in the form of dividend interest once a year. So those are some of the reasons why becoming your own banker is so safe. There are a lot of other ones that I can think of, but you're getting the idea. This is one of the safest investment vehicles that you can get. It is probably the safest investment strategy you can have, and I highly encourage you to actually look at this and investigate it further.